Hi everyone. So it is Wednesday the 6th of October. Is it actually Wednesday? Sorry, I believe it is. No, it's Tuesday. There we go. So typical quarantine kind of time loss. So what this video is about is that it's basically, if you have found that you sit in front of your computer during the day, you're looking for intraday trading opportunities, you're probably looking at the 5-minute or the 15-minute or the 30-minute time frames. And this is really about what do you do when it's just impossible to, when you get a sense of where are the trading opportunities. Like, I can't seem to find anything. I don't really know what's going on. I kind of go long on a trade and then the market goes down, then I sell and it goes up, and then you get into the state where you're kind of down for the, you're financially down for the day, and but you're also kind of lost in terms of inspiration as to where to go find trades, and it's confusing. Now, this is something that shouldn't be happening every day. If it's happening every day, then you probably are just trading too low a time frame. You probably don't have a fixed routine. You probably don't have a fixed strategy. There's a whole lot of like solid, reliable reasons why that's happening. But if it's happening every couple of weeks, or not every day, but every other day, or once a week, or maybe once a month, then the issue is often really, and this is from my personal experiences, is often that I'm trading too lower time frame. So the layout that I'm showing you now that's in front of me it's a 6-window layout. Now, it's incredibly powerful for finding trading opportunities for intraday trading. That's why I use it, because at a glance I've got the daily on the bottom right, and I've got the 15 minutes or 5 minutes on the top left, and I can find, if there's a trade somewhere, I can find it. I can find the right conditions and I can do it at a glance. But it has a problem because often the market conditions can be a mess. So if I jump across here, we look at Euro Swissy. Euro Swissy's daily, here we go on the bottom right, is stuck within a range. These are absolutely horrific money-making opportunities. They're not money-making opportunities, they're money-losing opportunities. The thing is, if you're not really looking at the daily, and you're looking at lower time frames, 1 hour, maybe 30 minutes or 5 minutes, you're not even going to realize that inside the daily, the daily itself is a mess. You're not even going to realize like that you're stuck inside that. So the title of the video is not being able to see the forest for the trees. But at the same time, this is something that can actually happen to everybody. Once in a while, we're trading happily, no problems, market's going roughly where we think it should be going, and there's decent money-making opportunities here and there. We know which markets to be looking for opportunities, and we also know which markets to be staying away from. But then you do get patches where, like this week, it kind of makes sense because there's massive contradictions between the monthlies and the weeklies and the dailies across multiple asset classes. And so the market is really going to use this week to figure out where it wants to go. So it is potentially going to swing both ways. I was going to make a joke like my ex-girlfriend or something like that, but anyway, it was just too easy. That's what she said. So what do we do in these situations? Okay, so the first thing is to take a step back from the lower time frames. You don't have to do it forever, but you need to do it for either a few hours or a few days. Step away from the lower time frames. Also, probably don't have as many windows open. So in this situation, I would just change over to starting with, say, 4 charts. Drop it down 4 charts, down to somewhere between 2 and 4 charts. Okay, so that's it. Reduce the amount of information that is coming at your head to help take away some of the noise. That's because your unconscious brain is still processing everything. And so that's what you're really working to reduce. If you can stop the background noise, which is everything you don't think you're paying attention to, reduce that, you're probably going to do a lot better off. So one of the things that I might do, for example, is just go to my monthly, weekly, and daily. And that's 3 windows. And then what I'm going to do is reassess what's the story. Okay, so this is good for a number of reasons. First of all, it resets what I think I'm supposed to be doing. So I can usually work out if this is happening if I've got a number of self-awareness triggers that I've now have developed over time, and a few of them are if I have more than 3 losing trades in a row, because for me that's unusual. I might have 2 winning trades and a losing trade out of 3 trades, but if I suddenly have 3 losing trades in a row, the very first thing I do is go, are they on the same asset class? Are they on the same currency pair? Like, is there a correlation that I'm missing that could have caused all 3 setups to go awry? And then of course I'm trying to work out, is it me or is it the market? So, but that's my alert level, because it's unusual for me to have that happen. So then I will step back. So then what I'm looking to do is first of all go up, and that's why the key is to head up the time frames. You only have to do it for a short period of time. You go up to the 4 hour, you go up to the daily, you go up to the weekly, and you ask yourself, okay, what is going on these time frames? Because if it's not clear on these time frames, it's definitely not going to be working on the lower time frames, and you stay away from it. So, for example, I'm looking here at oil. Let's just see if let's just go and have a look at something else. So this week, one of the things I really liked was that oil, especially say Brent crude oil, had got a monthly downtrend. It's got a weekly downtrend of lower highs, lower lows, and it's got a daily downtrend, or at least that's where it was on Friday. So it's beautiful because it's one of the few markets that has a time frame correlation. In other words, the monthly, weekly, and daily are going in the same direction, which actually is very high probability setups. And I mentioned in the analysis that it wouldn't surprise me if the market just kind of jackknifed and headed up a bit, but it shouldn't really be doing that. That's an odd thing to do. But surprise, surprise, it kind of has done that. It's backed back up over the level. It's still technically in a downtrend, but it is looking as though it's very much attempting to stay above this $40 level. And the problem is that on the lower time frames, this would have resulted in a little bit more chaos. And so what I've seen now by stepping up to the daily immediately is that my plan from Sunday, my weekly plan for this, is now meaning, okay, I've got to take a breather. Because the fact that the market did not carry on down, which it kind of should have from experience, means something is afoot. Does it mean the market's going to range for a bit? Yes, it could, because in the run-up to the US elections, we've got a bit of uncertainty. Anything can actually happen. But it shouldn't be doing that. It should have carried on down, and it hasn't. Okay, so that's coming from experience. It's not just coming from random theory. From experience, that was the one market that should have carried on down. Doesn't mean that it won't in the future, but it should have done it this week. It shouldn't have bounced right back up to where it is now. That's odd. It's odd enough that it means I need to take a step back. Okay, so then if I go and look at something else, I go look at euro dollar. Euro dollar is okay. This was a daily where I was looking at support and resistance, and it's broken back up above that level, and that's fine because within my weekly analysis in separate videos, which I'll tag on at the end of this one, I explained why this could happen. Either one could happen. Why the market was looking bullish on the weekly, but still had some potential room to go on the monthly, and all of that can still unfold. So in other words, I'm actually anticipating a bit of crazy behavior from some of the markets. I just wasn't expecting it from oil, for example. And where I'm going with this video is that this can happen. It can happen. This week is a great example where I think the markets could swing one way and then go back by Friday. So we could be all over the place. The markets could go nowhere. It's more likely to happen now, this week, across the markets, which are already showing conflicting behavior in the run-up to the most important election on the planet, because of the US economy being the biggest in the world and the US dollar being the biggest currency, that's being used. So just practically, those are the biggest cogs in the systems. So plus it's a very tense election. So all of that has created a general uncertainty, and the markets are almost entitled to act a bit kind of unsure what they want to do. The problem is that as soon as the stock markets climb, everyone's like, okay, the bull market's still there, as opposed to the fact that if a few days later the market then drops, then everyone's like, oh, well, something happened and it's caused the market to panic. But when you step back over the week, you get this noise behavior, and the market shouldn't really be doing that. It should either trend to the upside or it should trend to the downside most of the time. When it goes sideways on stocks, for example, that's unusual. That's unusual. Within currencies to go sideways, not unusual, because you've got two parties. You've got two economies pushing and pulling against each other. Stocks, not really natural for them to do that unless it's one of those stocks that doesn't really increase in value much. But general, the S&P, the Dow, they tend over their lifespan to trend upwards. They don't go one way, then another, and swing back and forth, unless when you zoom out by the end of the week, the weekly has gone away. So if the market is doing that, it's a bit confusing. So the solution for me is always to go up the time frames and to reassess what's going on for a day or two, to go back and go, okay, what's going on with the weekly, what's going on with the daily, at least those two charts, because either the market actually is going in line with the weekly and I'm just not able to see it on a much lower time frame, and I need to adjust which way I'm going. So that can happen. The market can in a very noisy fashion can still ultimately keep going. I mean, for example, we've got, say, platinum here as a palladium. So palladium has overall on that monthly, it's got a really, really nice trend. But if you go down to the lower time frames, it's really messy. It's very choppy and volatile. So the monthly is giving me a bit of direction, but the daily is just kind of, and obviously even the lower time frames would be even worse than that. And so to kind of wrap up, because we're kind of at 9.5 minutes now, I want to keep it under 10 minutes. The point here is that the first thing that I will do is go back up to the daily and the weekly to reassess which way are they supposed to be going. If they're contradicting each other, that gives me actually an immediate explanation as to what's happening. The medium term time frame, the weekly, and the shorter term time frame, the daily, versus the longer term time frame, the monthly, are all trying to figure out which way they're going to go, and that is showing up in the lower time frames. But basically the thing that I do immediately is start to look for clarity, and the only way in which I can do that is to go up. So imagine if I'm in a forest and I'm lost and I have a drone, I can send the drone up and I'm looking on my phone, and as it goes up and up and up, I can start to get a sense of where I am. Even though I'm lost in the forest, so to speak, I can start to get my bearings and say, okay, well, I see the coastline is down there, or maybe there's, there's a house over here, or there's a road over here, and I can get that. But the only way to do that is to zoom out, and that's what the higher time frames are. They should introduce clarity, and that's really where the weekly becomes very powerful, even if I like to trade the 5 minutes or the 15-minute time frame. So I hope you found that useful or instructive, or it's a nice little idea, but it certainly is one thing that I should talk more about, and it is certainly a technique that I do use. So there we go. Careful, obviously, between now and 3rd of November. Certainly I'll be extra cautious, but also I'm going to see where the week ends up, because I've seen the week start out Monday, Tuesday one way, and then end up going back in line with my original plan later in the week.